Anastasia, how hard is it to be constructive on this market, given everything that's been happening over the last couple of weeks?
Well, I think it's gotten a little bit harder, John. And the reason I say that, we had a nice recovery in the second half of April. And at the same time, there's two risks. They're really unresolved right now. And the first one is the banking turmoil. And I appreciate that some of these bank names are up today, but you know what? There's no fundamental reasons for why they're up. And as you talked about earlier in the program, there's no circuit breakers yet in place to end this banking turmoil. So that's one issue that I think markets have to grapple with. And then the other issue, which people are probably not talking enough about, is the debt ceiling. But as you know, the debt ceiling needs to get resolved by sometime in June, and the time to do it is May. So I worry that the policymakers may drag their feet on resolving both of those, mini crises. And for that reason, I'm a little bit less constructive, perhaps near term, as I was coming into April.
That's a change for you, Anastasia. How are you expressing that change over the last month?
Yeah, it is a change. And, coming into April, the view was that it's definitely we're poised for an optimistic shift and you want to be long stocks. And, I think as stocks have sort of recovered and maybe some of the tech names have rallied quite a bit, maybe you do pare back some of those gains. Maybe you write some call options on them, especially because volatility has spiked once again. But I do want to make an exception, John, that, I do think the tech resilience may actually continue. And so any sort of weakness that we get in tech in particular, I would be a buyer of. But trimming, whether it's a rebound in financials or trimming some of the cyclicals or trimming some of the small caps, to the extent they have any recovery, I would very much focus on getting out of the kind of economically interest rate sensitive names and getting into more defensive tech.
Is there a good reason right now to buy regional banks?
No, Jonathan, I don't think so. I think for regional banks, it's a bit of a vicious cycle right now, which is the shares are under pressure and investors and depositors lose confidence, and then deposit outflows can still very much be on the table. And if that's the case, then that potentially can lead to more short interest if that's possible in some of those regional banks. That's kind of the market cycle vicious scenario. But the other side of it is you've got funding costs that are still rising, have to rise for these regional banks. And at the same time, lending is becoming incredibly constrained and the demand is falling, the supply of lending is falling. So that's just not a good outcome for net interest margins and for net interest income. So I think it's still a very much challenged area until you either have the Fed that starts to cut rates or you have the FDIC insurance that actually does cover all the uninsured deposits. Until that, I just don't see a big opportunity in equities and bank equities.